Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Sten with tonight's Deep Dive. It is March 8th, 2018, and the market I'm going to take a look at tonight is soybeans. The ETF on the long side is SOYB. We've got the short, intermediate, and long-term pointed higher. We have a mixed technical bag here, and you'll see what this means in a few minutes. And we got the seasonal tendencies to the market are basically to the downside. We have a wave high that just recently triggered, and more importantly with soybeans we have a surge high that occurred a couple of days ago, and just today we had a stretch and a pulse that occurred here. These are highs, meaning the market should reverse in soybeans. So to really show this, let's take a look here at soybeans. What we're looking at is a few days ago we had a profit-taking opportunity. That's what this represents with the little plus sign there. And then today we had a pulse and we had a stretch high that occurred here. And this is the quintessential, hey, the market's over and it's going to go into some type of a reversal type pattern. So that having occurred today doesn't bode well for the market as a whole. Now our systems are still long soybeans, but they're close to triggering, and we're going to see how things kind of play out here. The other thing I'm going to show you with soybeans, if we pop back to the market here, to the website, is soybeans are number 2 on the list as far as accuracy, which is good. Then and only then are you really going to start to pay attention. In fact, when you look at the top 10 list, if you have a blue bar and a gray bar, both showing to extremes, meaning to the 4 level, then they're worth watching. It's worth watching when it goes to 3, meaning this gray bar goes to 3, but you're really going to be looking at any of these markets, corn all the way down to lumber, as markets that you should be looking at, and only then do you actually look at them on the seasonal tendencies. So let me show you what's going on with soybeans. Lo and behold, here on the 5-year, you see that it is accurately tracking the tendencies to the market, but we're just a hair away from the market typically starting to sell off here. If we look at the 10 years, it's basically the same scenario. So from where we are right now, which is essentially mid-ish March, all the way until latter part of March, you would see some type of a reversal. And because we're seeing the tendencies here in basically in soybeans coming down and really starting to get this stretch high that has occurred here, that's a really strong indicator that the market is probably going to, as a minimum, move sideways, but really start to have some type of retracement. You can see this nice little surge here. We had what was a pulse low, which was an excellent indicator here. The market has headed higher. We had an opportunity to unwind part of the long positions, still further another position to unwind some of the long positions, and when we get this stretch high, in accordance with the seasonal tendencies, this is when you want to really be closely monitoring things. So the fact that our systems are long the market in soybeans, obviously having taken advantage of this little surge here, we're going to watch things very, very closely in hopes that there's an opportunity to unwind positions. So that's tonight's deep dive, and I hope that you enjoy, and we'll take a look at another market tomorrow. Thanks very much.